Finally, after a long hold, LIC has filed its paper for IPO and all set for one of the biggest IPO ever in the Indian market. In this IPO, the Indian government, which is the 100% owner of LIC, is expected to be selling up to 5% stake in the company. Since the IPO price band is not fixed, the exact dilution by Indian government and exact LIC valuation is not yet confirmed. It would get confirmed once the price band is fixed in March 2022, just before the public issue is launched. This IPO is a part of the divestment plan from the Indian government and the IPO is expected to happen in March. So in this video, I have done a deep dive into the DHRP document and tried to understand the business of LIC, its key strength, future growth prospect, key risk and financials. Please note that we do not have the complete IPO details yet, hence I can't comment on the valuation and market cap and other IPO details, but this video is mainly to help you understand how LIC really works. If you are a long-term investor, then this video might help in taking an informed investment decision before applying for the IPO. Once the IPO dates and other details get announced, I'll update the same. But since the life insurance sector has different KPIs like your embedded value, gross return premium, new business premium and so on, which a normal retail investor don't understand. So I have decoded these KPIs and their meaning. Overall, this video would give you a very good understanding of life insurance sector and LIC position with future growth prospect. Alright, let's get started. The history of LIC dates back to 1956 when 245 private life insurance companies in India were merged together to form LIC. Until 2000, LIC was the only life insurer in India and then IRDAI allowed private companies to enter into the life insurance sector. If you look at the business of LIC, it is broadly divided into individual plan and group plan. Individual products are further categorized into two segments, participating insurance product and non-participating insurance products. So participating insurance product basically allow the policyholder to participate in the profit of life insurance company. It means with participating life insurance plan, LIC passes on the profits to policyholder in form of bonus and dividend, whereas the non-participating plan does not offer any dividend payouts. Non-par plans are further divided into saving insurance product, term insurance, health insurance, annuity and pension products, and unit-linked insurance products. On top of these plans, LIC also offers multiple riders that provide additional benefit along with base product to cover for additional risk such as your accidental disability, death, critical illness, and premium waiver on the death of the proposer. LIC also offers multiple group plans including your group term insurance product, group saving insurance products, group saving pension product, and group annuity products. As of 30th September 2021, LIC has 32 individual products including 17 participating products and 15 non-participating products and has got 10 group insurance products along with 7 individual riders. I hope now you understand the various product offering of LIC. Now let's try to understand the various distribution channels of LIC. So LIC products are being distributed by multiple channels including your individual agent, then bancassurance partner, which is the banks LIC has partnered with. Then alternate channels including your insurance marketing firms, brokers, corporate agents and so on. And fourth is digital sales via its company website and few other channels. But its major distribution of individual plan is via individual agents that contributes more than 95% of total business of LIC. Just to give you an idea, LIC has 13.5 lakh individual agents as of 31st March 2021, which is more than 8 times the individual agent network of second largest life insurer, which is SBI Life, that has around 1.7 lakh agents as of 31st March 2021. LIC has a huge network of 2048 branches and 1554 satellite offices covering 91% districts of India. Apart from this, LIC also has branches in foreign countries including UK, Bahrain, Mauritius, Fiji, Bangladesh and so on. Not only LIC is the leader in insurance sector, it is also the largest asset manager in India with a total asset under management of 39.56 lakh crore as of H1 of FY22. So LIC alone manages a total asset which is more than 1.1 times the AUM of entire mutual fund industry in India, which was around 38 lakh crore as of H1 of FY22. LIC has an embedded value of 5.4 lakh crore as of 30th September 2021. So embedded value is basically the sum of net asset value and present value of all future profit of life insurance company. Since life insurance companies earn periodically in terms of premium, embedded value considers the present value of all future profit. It is a very important KPI in the life insurance sector. Now you might wonder, who runs India's largest life insurance company? So LIC is owned by Indian government and has appointed a chairman along with a government nominated director and 4 MDs. Mr. Mangalam Ramasubramaniam Kumar is the whole-time chairman of LIC. He has been associated with LIC since 1983. Then Mr. Pankaj Jain is the government nominee director and he is an IAS from 1990 batch. Then 4 MDs include Rajkumar, who joined LIC in 1984, Siddharth Mohanty, who is associated with LIC since 1985, IP Mini, who is associated with LIC since 1985, and Vishnu Charan Patnaik, who is also associated with LIC since 1985. So overall, LIC has a very experienced leadership team with average experience of more than 20 years in the insurance sector. If you look at the key strength of LIC, its first strength is its dominance in the Indian insurance sector. LIC is the largest life insurer in India in terms of GWP, that is gross written premium, NBP, that is new business premium, and total number of individual and group policies issued as of 2021. Now there are a lot of terminologies that you are probably not aware of. So it is important to understand these KPIs. So first of all, insurance companies do not earn from a one-time transaction. When you take an insurance, you pay premium on a monthly or annual basis. So insurance companies continue to generate revenue in the future. Hence, GWP, that is gross written premium, is total revenue that insurance companies expect to be received in the future. LIC has 64.1% market share in terms of GWP, that is gross written premium in India, in FY21. Then NBP, that is new business premium, means the premium collected from new insurance policies from a specific year. LIC has 66.2% share in Indian life insurance industry in terms of NBP in FY21. Just to give you an idea, LIC NBP is 8.9 times the NBP of second largest player in the Indian life insurance sector as per CRISIL report. Then LIC has issued approximately 2.1 crore individual policies in India in FY21, which is roughly around 75% market share in new individual policies in India. So basically, LIC is huge and it is way ahead of other companies in the insurance sector in India. Its second strength is its strong brand name. LIC enjoys a very strong brand positioning in Indian market where the name LIC is almost synonymous with life insurance. Then third strength is a very strong distribution network. LIC has a very strong distribution network of 13.5 lakh agents, 72 bancassurance partners, 174 alternate channels, and many other micro-insurance agents and point of sale. Then fourth strength is very diversified product category. LIC caters to various individuals and group insurance companies across segments with 32 individual products and 10 group insurance products. Now, as far as future growth is concerned, I believe that the future of life insurance sector in India is very bright. What are some growth drivers? The biggest growth driver is that India is one of the fastest growing economies in the world. Indian middle class segment is expected to jump from 4.1 crore in FY12 to 18.1 crore by 2030. So basically there's an increase in income level that would create a huge rise in Indian middle class population. Then government has a lot of focus on financial inclusion from rural part of the country. And there's a rapid urbanization in the country. And of course, there's a growing awareness about taking a life insurance plan and a medical plan for financial security. So all these factors would result in high growth in the life insurance sector in India. As per CRISIL report, the gross written premium for life insurance in India is forecasted to grow at 14 to 15% CAGR between 2021 and 2026. The new business premium is expected to grow at 18% between 2021 and 2026 for individual business and around 17% for group business. Now within Indian insurance sector, one area that has immense growth potential is pension products. As per CRISIL, there are still 82.7% people in India that are employed in unorganized sector. And a lot of people work in private sector where you don't generally get pension plan. And there are a lot of people who do not want to take high volatility of stock market. So they are looking for good pension plans that can offer a decent return at low risk. Just to give you an idea, the share of elderly population in India is going to double by 2050. And these people would need pension plan at an early age to take care of their financials after retirement. So there is immense growth potential in annuity and pension plans in India. So far we discussed the positive aspects of LIC, but you should be aware of the key risk. First risk is fall in persistency ratio in FY20 due to global pandemic. Persistency ratio means how many policyholders have paid their renewable premium. Quite often people end up discontinuing their policies. Hence, it is very important for insurance companies to maintain a high persistency ratio where the policyholder continues to pay the premium. But there could be a risk of high surrender of policies which reduces its persistency ratio. This can in turn impact company business. Then second risk is mortality risk, which is a part and parcel of insurance business. The annual premium that policyholders have to pay depends a lot on assumptions like how many claims company can expect in the future and what are the expenses company would have to bear. Now, if there is a high mortality rate than expected, then it would directly result in higher claims and can impact the business of the company. For example, recently during COVID, there was a rise in claim that impacted the profitability of life insurance companies. Then third risk is competition risk. LIC is a leader in insurance sector in India even after many years of opening up of the insurance sector to private companies. But it is facing tough competition from private players that are growing quickly and eating LIC market share in individual business. Some of the competitors of LIC include SDFC Life, SBI Life, ICICI Prudential Life, Max Life and so on. So if you look at the assets of LIC, in FY19 it stood at 33.66 lakh crore. Then in FY20 it was 34.14 lakh crore. In FY21 it was 37.46 lakh crore. And in H1 of FY22 it was 40.43 lakh crore rupees. And if you look at the LIC GWP, that is gross written premium, in FY19 it was 3,37,000 crore. Then in FY20 it was 3,79,000 crore. Then in FY21 it was 4.02 lakh crore. And in H1 of FY22 it is 1.86 lakh crore. Then if you look at the NBP, which is your new business premium, in FY19 it stood at 1.42 lakh crore. In FY20 it stood at 1.78 lakh crore. Then in FY21 it stood at 1.84 lakh crore. And in H1 of FY22 it stood at 85,112 crore. And finally, if you look at the profits of LIC, in FY19 the profit stood at 2,627 crore. In FY20 profit stood at 2,710 crore. And in FY21 profit stood at 2,974 crore. So year on year there is a rise in profit. And what is more interesting about this is that in spite of your pandemic and COVID, there is not fall in profitability of LIC. And in H1 of FY22, the profit stood at 1,504 crore. So in this video, we discussed how LIC makes money. LIC is the biggest life insurance company in India with a market share of 64.1% in Indian insurance sector in terms of gross written premium in FY21. It has been a household name in every part of the country. LIC has a strong network of 13.5 lakh agents. As far as future growth is concerned, LIC has a bright future growth prospect due to increasing middle class population and increasing awareness about the importance of insurance. Moreover, there is a huge market for pension fund in India. Although the company faces a tough competition from private players in the sector. We still do not have complete IPO details which are expected to launch in the month of March. But once the IPO dates are announced, I will share the other details like market cap, valuation, etc. I hope you will find this analysis useful if you are a long-term investor. I'll see you in the next video. Till then, take care.